What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. As of right now, the SoFi stock has 3 more trading days until its earnings next Monday, which I will also be covering live. And I'm hoping to get, maybe 1,000 to 2,000 people watching that live stream. So if you find any of this information useful, be sure to smash the like button. Let's try and get the video to 1,000 likes. Don't forget to subscribe to the channel. And don't forget to drop a comment. I'm going to be commenting back to as many people as I can. Now, guys, I want to be completely transparent with you about the SoFi stock, okay? Right now, let's say if SoFi were to be growing users at 100 to 200,000 users per quarter, I think right now, at the stock price it's at, it would probably be a really bad investment because, there's just so much market share out there to go around. 100 to 200,000 users would just not be bullish, in my personal opinion. Let's say SoFi were to be growing revenue at about 10 to 15%. In this big fintech market, all these digital banks popping up, I would think SoFi would not be a very good investment, especially at these levels. If those two things were happening right now, I would probably just be making YouTube videos for views and just to gain attraction. Okay, that's being completely honest. If SoFi were growing 100 to 200,000 users per quarter and 10 to 15% revenue growth, I would be pretty much a con artist, okay? Because those numbers are not bullish in my personal opinion at all. And I think the valuation that SoFi is getting right now, it does have a growth multiple built into it. We will see that more reflected once we get profits, but I just want to be transparent with you guys. But that is not the case, okay? SoFi's user growth is continuing to go up for the last 8 quarters. I mean, going higher and higher and higher to new records. Why is that? That is because they are building a company with perfect brand awareness, perfect trustworthiness, and they continue to see users skyrocket. Guys, we saw 700,000 plus members, and the CEO of SoFi thinks that they can get that number to over 1 million next year, potentially, or the end of this year. That is insane growth in a market that has just been overrun by legacy banks maxing out their dividends for the past 100 years. Okay, that is insane to steal that type of market share, guys. If we get to those numbers next year, we're talking 4 million people per year coming over to SoFi, guys, with customer acquisition costs dropping. These are bullish trends that are happening, okay? I know that SoFi is still a risky investment right now because it is unprofitable, but they have been growing at scale, and scale costs money, losses, but it will benefit you in the longer term, 5 to 10 years. But you don't have to wait 5 to 10 years to get the profitability. You only need to wait 3 more days, and that also is not going to go backwards. The profitability will be moving upwards from the management once again. So where right now is this a risky investment if you just have a, 2 to 3 year mindset on the stock? Back to revenue growth. I think this would be a risky investment, 10 to 15% growth, because there is some banks out there like a Morgan Stanley and a Goldman Sachs, banks that get a premium valuation compared to other banks. Remember, guys, when people come at me comparing these, a SoFi to a JP Morgan, a Wells Fargo, or a Bank of America, I just laugh because you don't see the growth rates that SoFi is producing and plans to produce for the next 10 years. There's a reason why those companies deserve a 8 to 10 PE ratio, because you look at their 3 year, 5 year growth trends, they're minimal, single digits. That's just the case. If you go over to like a Morgan Stanley, Goldman Sachs, they have, revenue growth in the 15% range. That's why they get PE multiples of a 16. That's a big difference when you look at a PE multiple of 10x to a 16x, okay? And then you have SoFi, which is going to be growing 2 to 3 times faster than those Morgan Stanley and Goldman Sachs for the next 5 years plus. That's just revenue growth, but the bottom line is going to be dropping as well, the same speed. So that's when you get a PE multiple, in the range, of a, 30 to 60, let's say, because the growth is 2 to 3 times faster because there's a new trend happening, a digital transformation. And SoFi, once again, is obtaining that because you're seeing the users accelerate for the past 3 years and plan to accelerate for the next year for what we're seeing, a million. Maybe we top out a million, but hey, I think a million is good to run with for the next 3 years. I mean, guys, think about how many people that is coming onto the platform. 4 million per year. That is literally, less than 12 months away, in my personal opinion. So I want you guys to know I believe that this is a real company. I am not just pumping this stock for fun. It is a risky investment now because it is still unprofitable, but you just need to give this bad boy a little bit of time. And I believe it will grow into its valuation. It'll continue to grow, and the multiple will always, stay in line with the, net income, the profitability. It'll just be catching itself every quarter. The stock may go up 50%. Hey, the EPS grows 50% and just continues to grow. You've seen that happen with, crazy stocks like a Chipotle, restaurant industry, Tesla, automobile industry. When you hear about markets like an automobile or a restaurant industry, people get concerned. They don't want to touch those because they don't see growth. Hey, that's because there's no growth in 98% of the other companies, but there's always, one winner out there doing it better than others. And that goes with the banking sector as well. No one has done it right yet. As of right now, apparently Morgan Stanley and Goldman Sachs are doing it the best for growth. But guys, once we're profitable just like them and we continue to show these growth trends, I believe we're going to have a higher PE multiple, and that PE multiple will stabilize and continue to grow. You've seen this in every industry. Nvidia, the stock, just freaking continues to accelerate growth, and the PE multiple continues to go higher, but it catches it up. It just catches up to it. I am tired of people telling me that, this is what the banking sector is priced at. Most of these big banks are priced that way because that's their growth rate and what they've shown for the past 3 to 10 years. It's not changing. They are losing market share and hanging on by a thread, collecting fees to stay alive. SoFi offers no fees. It just, the list goes on. You will see in a matter of time, the sentiment will change. It may not be next week when SoFi turns profitable, but I think we continue to see quarters of profitability. The sentiment will officially change. Let's get into the video. Don't forget to smash the like button, drop a comment. Be sure to subscribe to the channel. I'm sorry I am, ranting a little bit longer, but I just wanted to get that off my chest because, a lot of people are concerned, with this stock's price action. I totally agree, but things will change. There is growth investors out there that don't give a damn about the legacy banking market, and they will go where growth is showing with profitability, and I believe SoFi will show that. Let's get into the video. If you've been following my last couple of videos, you guys would see that, we have max short-term pain this week, potentially in the 8 to 850 range. And because of the SoFi stock selling off today, 2% for a long period of time, you can see exactly what these market makers are doing. These are the call options, bullish, $8 to $11. And guys, this is what the asking price for these call options are. 1 penny, 1 penny, 1 penny, 1 penny, and then 2 pennies on the $9 call. So you can see that the 8s and the 850 still have a little bit of life, and that's where you get to the max pain. They burn all of these to the last penny, and then these potentially have, a couple of pennies, they're worth a little bit. So that's where max pain comes. They eliminate the call options that are way out of the money. That's exactly what we got today. That's exactly what we got last week at, I believe, 750. So the bullish case scenario by Friday is closing at the $8 and 50-cent range this week. That would be the bullish case scenario. Okay, so we just need to get by today. We just need to get by this week, guys, and get to the weekend. And then I believe the shorts, they won't have a lot of moves left, and they will really have to eye those earnings and see if they can continue to short, because other investors might hop in and destroy their short. All right, guys, and just like I said at the beginning of my video, there is many sectors out there that, are bearish sectors and have low valuations and low multiples, but there is certain stocks in those sectors that have created a multiple because of their business, and the difference that they made with growth. It's all about growth. And I believe SoFi right now is kind of getting priced for its growth, but not fully because we don't know what type of profits this company can see and what type of profits they can grow. So it's still a crapshoot, but we need to just wait to get the profits next week. But take a look, guys. Restaurant industry, one of the lowest multiple valuations industries in the world. I mean, we're talking what, 5 to 10 max PE ratios. We got Chipotle right here. 3-year revenue growth rate is only at 15%. This company is getting a PE multiple of 55x because they are doing what the restaurant industry is not able to do, grow at these consistent growth rates for 3 to 5 years plus. We have Tesla, automobile, some of the lowest PE multiples in the world. We're talking all under 10. Toyota, GM, Ford, list goes on. 3-year growth rate, 36%. That gives them a PE multiple of 67x. And just look at what you see on Twitter. All of those people. Tesla is 50% undervalued from here. Needs to double to get to a correct valuation. So they're talking 130x PE ratios because they see the growth rate. So a lot of people are buying up this stock at this level. I mean, it's holding decent support at the around $200 range, but you guys can see it's getting a really nice multiple of 67x. Celsius, new energy drink on the market. Energy drinks, not getting crazy multiples. I don't really follow these, but I just want you guys to see. They're showing a 3-year growth rate of 94%. Absolutely insane. And you can see they get the highest multiple out of Chipotle, Tesla so far, 110x, because they're showing 3 years of consistent growth, in a slow growing market. When you think of like Monster Energy and other companies like that, Red Bull. And then we go over to Palantir, AI software. These get high multiples regardless because all of them grow at the same type of speed, 20% plus. The 3-year growth rate is Palantir 30%. Last year, it did go down a little bit in like the 20% range, but hey, they're still getting 132x PE multiple. Very, very solid, nice growth, but they need to really maintain that because their growth has slowed down. So some people could say it's overvalued here, but you still have, a lot of Palantir bulls saying, it should double from here or stuff like that. 250x multiple on 30% growth. I just don't see it. They need to continue to grow profits and grow revenue. Goldman Sachs. Now we get over to those banks. These are the top tier banks, Goldman Sachs and Morgan Stanley. 5-year growth rate on Goldman Sachs, 14%. That gives you a 16x PE ratio today. Trading today. Go over to Morgan Stanley, 5-year growth rate, 13% revenue growth, PE 16x. So you can see these are the banks that are getting the higher PE multiples. And I don't think we're going to be in those categories at all as well. I think we're going to be growing 200% faster than these types of bank at 30 to 40% range for the next 3 years. And you can see we got SoFi right here, 3-year growth rate, 40%. This year we're looking at about 34%. Hey, there's a possibility we may go higher. There's a possibility we may go lower, but I still think we're going to get 30 to 40% for the next year for sure. And guys, we need to see the profit. All these companies are profitable. SoFi is not profitable yet. That's why it's a crapshoot. That's why it's still very, very risky. I would say it is true until we get profits and see what type of profits they can have. But let's say they have a $30 million profit. You're going to times that by 4 to get a PE ratio. We got 120 million net income full year. The market cap right now is about 7.6 billion. We're going to be trading at a 62x PE on 40% growth rate if we can get 30 million profit. Hey, I hope we get 30 million profit for our first profitable quarter. That's not bad at all. But hey, let's say we get a $50 million profit. 4 times, 200 million net income, that's a 4 PE. 37x, extremely low in my personal opinion when you're talking about triple the growth rates of Goldman Sachs and Morgan Stanley. So let's just call it right now, 30 million profit. I hope this happens. It's a possibility we may get a 10 million, 20 million, who knows, but we need to go off something for now. 62x, it is a little bit expensive, but hey guys, it still would be considered half of Palantir's valuation. It would be about the same as Chipotle's with double to triple the growth. So it's just different things to consider, guys. There's never been a bank to do this. There's never been a bank to be profitable and grow at these rates. So we need to just get one profitable quarter under our belt. But yes, guys, you can see it as of right now, it would be that SoFi is considered, an overvalued bank for sure at a 62x PE compared to, 16x's. This is true, but hey, how much can they grow? How fast can they grow? What's going to happen with Galileo? Are they going to get massive net income boost over there? You just don't know. I think SoFi has just showed so much scale and users, and this is a trend that is not going to stop, and you're going to continue to see revenue growth and profits grow. And we just have to wait and see, guys. But this is what I'm talking about. These are the PEs we could potentially be looking at on Monday once we get our first profitable quarter. If you made it to the video, I want to say I really do appreciate. I enjoyed doing this video for you. Once again, guys, I'm really bullish on SoFi. As you guys can see, I think this is going to be an amazing growth story. It just needs a little bit more time. We need to get profitability under the belt, and then we could see other metrics on how to price SoFi, especially in the PE ratio, going over the revenue growth and stuff like that. So be patient, guys. We've got 3 more trading days until we get to earnings Monday. Don't forget to subscribe to the channel. We'll be going live, covering the earnings and also covering the earnings call. Once again, my name is Kyle. Hope you have a great day.